So let me just be real clear. My views on what's ahead for technology are quite in contrast to that of most people that you would read about or hear. I think the big unseen truth of 2022 is that markets have had one powerful feature: movement of tech, and in fact growth stocks overall, has correlated overwhelmingly with direction of market. On days when the market's down, tech goes down more. On days when the market's up, tech goes up more. The correlation there, depending on exactly what you're measuring, runs mid-70s into low 80s. The fact of that, said differently and simply, is you tell me if the market's going up or down, and I'll tell you let's say over 2 weeks, I'll tell you whether tech leads or lags. In history, when we've had bear markets, there is another overwhelming tendency that which drops the most bounces the most in the early phases of the subsequent bull market. Of course, that varies slightly cycle to cycle, but on average has lasted about 11 months, almost a year. Sometimes a little shorter, sometimes a little longer, which you would expect. What does that mean? That means when we get to the bottom, whenever that is, you should expect to see tech, because it's been lagging because we've had more down days than up this year, which you know by definition, since we've had a down year in 2022 through the middle of the summer. You should expect to see it leading once we hit that bear market bottom and start on the other side. Now, I don't want to argue with you in this video about direction of the market. I do want to say, once you get down this far into a bear market, it is not terribly long in time until you normally get to a bottom. We can debate what that is, but once you get to that bottom, you should expect to see tech leading for about the next year, and therefore, maybe longer, but for about the next year. And therefore, we should be seeing most of the next year led by tech going up. I want to step back and reiterate. Market down, tech down more. Market up, tech up more. The correlation to that is so high and yet not widely perceived by people. I've not seen anything stated on this in public anywhere, but it's a simple, unseen fact. And facts are stubborn things. And the stubbornness of that ripples over into this feature that I just articulated, which what falls the most in, as categories, not individual stocks, categories, falls the most in bear markets, bounces the most for a good long time coming off the bottom, and you should expect that with tech as we hit a bottom, when we hit a bottom. Thank you very much for listening to me. Subscribe to the Fisher Investment YouTube channel if you like what you've seen. Click the bell to be notified as soon as we publish new videos.